So last Friday, Anthropic launched a single tool, and by Tuesday, $280 billion had been wiped out from the stock market. And this week, we just got the worst layoff numbers since the 2009 financial crisis. But here's the part that should genuinely concern you and most overlooked. The same companies cutting those jobs just announced they're spending $500 billion on the exact technology that's replacing those workers. And no one can agree whether this is the biggest bubble since the dot-com crash or the biggest buying opportunity we have seen in the last few decades. So by the end of this video, you'll fully understand what happened, why Wall Street is panicking, and ultimately what it means for you, whether you're an employee or a business owner. So let's first start off by covering a CNN article. Claude Cowork is essentially just an assistant meant to be like an AI colleague. You can think of it as like your personal assistant. And it has the ability to read files, organize folders, and draft documents on your behalf. So what really sent things south were the new plugins. So these plugins are tailored for specific industries like sales, finance, data marketing, and legal. And this launched on Friday and really put into question kind of the as you can see here, the bread and butter software as a service business. Companies that use AI to automate and build their own tools might need fewer subscriptions to external research and data services, directly hurting software companies. Now, this was very apparent because these plugins, literally, you can actually use a lot of them and you can do the same things that many of these subscriptions that many businesses or individuals are paying for, you can do. And Anthropic is fairly cheap. The Pro plan is about $30. So that really shook the market. And kind of the rhetoric is, why do I need to pay for software? I mean, I use Claude Code daily, and that's my exact thinking. If you use any of these tools, if you're just using it for like basic prompt uses, you still see the mass efficiency you're getting from using these LLMs. Take it a step further. If you're using Claude Code, you really are questioning, or at least I am really questioning, what I'm paying all these other subscriptions for when you can kind of build it out yourself. And Claude is providing plugins, connectors, and MCPs. You really start to question, and that we saw here, right? And so even an exchange-traded fund tracking software industry slumped 5.69% on Tuesday, and it had its worst day since April. Again, TRI plunged almost 16% on Tuesday, like unheard of. LegalZoom, LZ, sank almost 20%, all right? And we just didn't see it in North America, right? European countries, European companies felt the pain, all right? London, X, Y, and Z. FDS fell 10%. Financial firms and fund investments in software companies sold off as well. So it wasn't just kind of your retail, it was even some of the funds were selling off. No one has really seen this before, right? AI is super new. I don't even think retail knows what is going on, right? Let alone these big firms and funds. And so, I mean, it's important to note Anthropic CEO Darren Modi, read his essays, they're fantastic, but he has warned. All right, he's kind of the main individual speaking up about these things. And he says AI could displace half of all entry-level white-collar jobs in the next 1 to 5 years. And I've said 2026 will be the year where there's just no turning back. And I know maybe that sounds crazy, and maybe you're not up to date with everything that's going on, but 2026 is going to be the year, and we're seeing it in Q1 already. We're going to talk about the job loss here shortly. Even Mark Benioff, Salesforce, massive company, they said last year they won't be hiring any additional software engineers, customer service agents, or lawyers because of AI tools. So if you have Salesforce, I believe it's one of the biggest CRM companies, right? Massive company. And they're saying themselves, we're not hiring all these type of workers because AI is going to do that. How do you think retail, how do you think everyday people, how do you think the funds are going to react, right? And he said this last year. There's been a lot of improvement in these tools since last year. So a lot of people think this is overblown. However, we kind of saw the same market sentiment last year as well. So if you recall last year, DeepSeek, they released cheap and efficient AI models. And NVIDIA lost nearly $600 billion in market value. And that was only the start of the week, because then earnings started rolling in. And so this is the real fuel that's been kind of building up for weeks. So we do have CEO Andy Jassy here, basically saying we have such strong demand for existing offerings and some opportunities like AI chips, robotics, and low Earth orbit satellites. We expect to invest about $200 billion in capital expenditures across Amazon in 2026 and anticipate strong long-term return on invested capital. And so this is very true here when it says, in a week when investors have started treating AI spending plans the way Americans treat rising restaurant menu prices, with widening eyes and a sudden interest in doing the math. Because these numbers, again, we have not seen anything like this in history. The numbers that you're throwing out here, even if you look at Elon Musk's new updated net worth, it's almost $1 trillion. All right, we have never seen anything like this. So as an investor, you have to think, okay, so what is actually going on here? Like, where are these numbers coming from? How is this possible? Does the math? All right, and that's what we have here. So off the back of that statement, you have shares falling as much as 10% in after hours trading. So big tech's CapEx plans have become the market's favorite form of indigestion, and a bad tape doesn't exactly make investors more patient about long-dated payoffs, right? That was kind of my thesis for OpenAI. No one wants to wait years on years just to turn a profit, right? Sometimes you do get a bit greedy, right? And the problem is, again, number one, we're in an AI race, so everyone's just pushing forward. Number two, this stuff takes time. Elon was recently on a podcast, really good podcast, and he's basically saying we're rushing as fast as possible, but this stuff takes time. Like the robotic stuff that he's trying to get into takes time. This AI stuff, data centers, like it needs to be built, and that just takes time. So you are seeing market sentiment slowly switch. Everyone hates it. You know, people are starting to get fed up with all these big numbers that are just out of this world. And it's not just Amazon. Meta said they'd spend between $115 to $135 billion on AI in 2026. All right, and that's nearly double what they said last year. So these numbers are just compounding. Same thing with Microsoft. They're now spending $37.5 billion per quarter on AI infrastructure. That's $150 billion a year. And so here's what no one seems to put together. These four companies are spending over $500 billion to build AI that is powerful enough to replace full tech sectors. And Anthropic just proved that it can be done, which just means the market is terrified of two things at the same time. And those two things contradict each other completely. And that contradiction is the key to understanding everything that is happening right now. So, you know, this could be a massive bubble, and that's what everyone's freaking out about, because with this game, you have to pay to play. As we can see, the sell-off, which arguably started last quarter, is a manifestation of awakening to the disruptive power of AI. And then here, the seemingly wide moats of these companies feel a lot more narrow today as competition from AI-created products intensifies. Perhaps this is an overcorrection. So the ones that are obviously putting a ton of money in, if this doesn't work out, you know, that's obviously terrible. So on the flip side of the coin, you have people thinking, what if this does work out, right? As you can see here, there's so much panic because people are starting to think, wow, if this does work out, what happens if it does make sectors obsolete? Like, what do we do then? And as you can see, that was on full display in recent days with Cloud Cowork and all the plugins and all the things it can do. But to Bank America's point, they said both things couldn't be true at once. They basically stated if AI is that powerful that it will make all the sectors obsolete, then it's not wasted money. It's actually probably the most important thing ever, period, that we should be funding or putting money towards, because it's just that impactful. And to their point, if the AI spending does not turn out good, then these companies will be fine because everyone's just going to still use them, still stay subscribed to their products and SaaS products. And so the market is pricing in both of these disasters at the same time. But if you understand just how early and how real these consequences actually are, then all you need to do is just look at the job market this past week. So we can see here that the Bureau of Labor Statistics said that the estimated number of job openings sank to 6.54 million at the end of December, settling at the lowest level since 2020. Now, just from what I've seen in my experience, I think we have been in a hiring recession for a very long time. Obviously now it's gotten a lot worse, but again, I've known Ivy MBAs that have troubles getting jobs, or people do get the jobs, however, they're not compensated appropriately for those roles. Like I've said before, we are currently seeing in real time the death of knowledge work, and credentials do not hold the same weight as they once did. Because these tools are just going to replace all of that. So last year, the U.S. labor market posted the weakest job growth outside of a recession since 2003. So we're talking 20 plus years ago, which is a lot, right? The U.S. private sector firms added just 22,000 jobs in January, according to the latest estimates from payroll. January's estimated job gains, which were the weakest in 3 months and the worst for January since the the C-19 resurgence. So again, we're talking years ago. There was an estimated 231 initial job claims filed during the week that ended on January 31st, an increase of 22,000 claims from the prior week, right? So we're seeing an increase, however, where is all this coming from? Well, mass layoffs outlined last month by the likes of Amazon and UPS made for the worst January for job cut announcements since the Great Recession. That's a very, very long time ago. US-based employers announced 108,000 job cuts in January, a threefold increase from layoff announcements in December, and more than double that was tallied in January a year earlier. It's the highest number of layoff announcements made in January since 2009, since the financial crisis. So this is not theory anymore, right? We are seeing the impact of many factors. And like I mentioned, it means that most of these plans were set at the end of 2025, signaling employers are less than optimistic about the outlook for 2026. So, again, these bigger companies are seeing the writing on the wall. Now, to their point, the biggest reasons cited for the month's planned cutbacks were contract loss, market and economic conditions, restructuring, or closures. So it's not all AI. AI, in fact, only was cited for 8,000 job cuts, right? So it's not all AI. However, AI is not helping things. The spend is not helping things. So there's so many variables, and it just seems like it's all being pushed downwards. So the ultimate question becomes, if this is real, if this is happening, what actually comes next? And so before we go any further, I think we should provide some perspective, because I don't want to leave you thinking the world is ending. I'm not trying to provide you with a justification. I'm trying to provide explanation. And ultimately what we're seeing could be just the start. Transitions like this, I do think the transition period is probably going to be the most turbulent, but it doesn't take weeks, months, it takes years. So there's a few questions to ask. Number one, does the AI spending translate into actual revenue? And by Q3, we'll start to see some of the rhetoric, whether it is or it's not. Second is obviously the labor market. If layoffs keep accelerating and hiring stays frozen, the Fed will probably come under pressure to cut rates. And rate cuts, as always, change the entire equation of what's really going on. And then ultimately, third, speed of adoption. When are these big companies going to start implementing these technologies to start replacing a ton of this work? Now, that is kind of happening already with a lot of robots in manufacturers, but again, this is just the start. We haven't seen true adoption just yet. So my honest answer is this: no one knows yet what to expect. Is this just a bubble, or is this one of the greatest opportunities ever? No CEO knows this. No big company knows this. Not the analysts writing the report, not even me. But I will say the answer is coming, and it's coming faster than we've ever seen anything else before in history. As always, I hope you got value from that video. Subscribe, comment down below, and as always, I'll see you next time.